Everyone, so this is going to be a trade of the week recap where I go over the full week's price action just very briefly, and then I go over what, in my opinion, was um, my favorite trade of the week that I took and what I think was the cleanest. So, really, just this won't be too long, just a quick breakdown of the week's price action as a whole. Um, just again, a huge drop um, from the new week opening gap from 4 p.m. on Friday to 6 p.m. on Sunday. And that's two consecutive weeks that that's happened. So just following the election and all this talk about tariffs and just all these different things, it's really it's weird. The market is in a huge range, but it's also extremely volatile as well. Um, so that's just something to consider going into every single trading day. But following that drop, we just had steady movement higher the entirety of the week from Monday, Tuesday, Wednesday. A lot of consolidation on Thursday, really nothing happened there. And then one last poke up above, being this Judas swing to take the previous week high right here, and then had a huge drop following the release of NFP on this 10 a.m. candle right here to take these equal lows right here back into this 1 hour fair value gap, reaching the new week opening gap high right here. And all of these levels were somewhat in alignment with the new week opening, or excuse me, the TGIF levels. And if you don't know what TGIF is, it's just typically if the weekly candle as a whole is bullish near the end of the week, what you can expect most of the time is after a higher time frame level liquidity PD array has been met and the objective is done for the week, you can get a 20 to 30% retracement um, of that weekly range. So that's what we were looking at right here. That's what came into play. Um, so that's pretty much a very brief recap of the week as a whole. What I wanted to do was go over the cleanest trade that I took. I thought was the best opportunity for me during the week, and that happened on Tuesday. So what I'll do is I'll back it up here on replay mode, and then I'll show the executions after. But following right here, going into the day, let's back it up to pre-market. Okay. So we got 8 a.m. right here. This is the 8 a.m. hourly candle. And up to this point, we've traded on Monday and we filled that new week opening gap level. And I feel like what a lot of people expect is, okay, we filled the gap, now we should go lower. And that's not necessarily always the case. I think that since we're in this huge weekly range, and for me personally on the daily and weekly time frames, there's no clear directional draw because we've got weekly equal highs up here and weekly equal lows down here. And we're literally trading right in the middle of it. I'm not going off of like a higher time frame, weekly or daily draw on liquidity. What I'm doing is I'm going into the much lower time frames and building a session bias or um, like an hourly range bias from there. And just trying to take scalps, not trying to be too greedy or anything like that, hold for a long period of time because again, we're trading right in the middle of this huge range, and so you could see quick and sharp sudden movements in either direction um, happen at any time, just because it's kind of for me at least a little bit more unclear right now. So really, what I'm doing when I go into the day is I'm checking: are we respecting bearish PD arrays or bullish PD arrays? And are we disrespecting bearish PD arrays or bullish PD arrays? And that's going to help me find out where is order flow aligned with. Are we bullish or are we bearish? And then from there, I could start finding my draw on liquidity and what would be the most obvious um, area for me to target, whether it's going to be an imbalance or liquidity itself. And so going off of those ideas right there, when I opened my charts, I saw that we were trading above this 1 hour bearish fair value gap right here. So you see big displacement from the midnight candle right here, leaving this fair value gap. We tapped into it, Saw a little bit of a movement lower right there and then slowly meandered and then got this big push above right there. So at this point, what we've done is we've gone into this hourly fair value gap right there, and we've used that as support. And if I check the 4 hour time frame, we're also trading into this huge 4 hour fair value gap right there as well. So those were in alignment with each other, just higher time frame alignment. Stabbed into that. So now we're respecting a 4 hour fair value gap and a 1 hour fair value gap, and we're disrespecting a 1 hour bearish fair value gap right there. So we're respecting bullish PD arrays and we're disrespecting bearish PD arrays right there. So that helps me to determine my order flow on whatever time frame that I'm using to determine those types of things. Um, so if we go down to a 15-minute time frame now at this point, you get a little bit more data right here, and we can see that within that hourly fair value gap right here, it's a much larger one right there. So we have it refined, which is nice. And then same with this one right here, the hourly fair value gap. So at this point, I like to check like session liquidity and target obvious points of liquidity. And so I want to see, I'm always trying to find out what is like the daily profile, right? Are we making a London high or a London low and then um, having a New York continuation, or are we going to have a New York reversal? What can I expect? And I use that in alignment with, are we respecting bearish PD arrays or bullish PD arrays? And what are we disrespecting? And so at this point, what we've seen is if I pull out this indicator right here, this is just going to give you a really clear way of seeing what the obvious highs and lows were in sessions, in its specific sessions. You don't really need this. I honestly recently added it just because it's something that I can use really quick to see. Um, but I like to see that we dove lower right here into this hourly fair value gap right here, right? And this is London low. So now what I can expect is, since London was an actual dive lower into a bullish higher time frame PD array, it's not just a random movement into just some random level, right? This is a calculated Judas swing into a higher time frame PD array being a bullish one, and then we're disrespecting bearish PD arrays and respecting bullish PD arrays. And so now with that type of information, I can suspect that this isn't going to be, um, or odds are this isn't going to be met again, because 70% of the time, London is going to make the higher low of the day. And in this case, if I'm already seeing bullish PD arrays being respected, and London gave this type of move lower, which swept this swing low liquidity into an hourly fair value gap, well, now this is starting to be a little bit more meaningful than just one price leg run lower. Now this is telling me that this could be potentially the low of the day because it's more meaningful for the reasons that I just said. What happened following this is, after taking this low right here, creating the London low of the day, that's what we're assuming at this point, we started to see this steady move higher. Now, this isn't the cleanest price action, obviously. You can expect that just on NFP weeks. It's not going to be as clean until following the release of NFP. But what we've got at this point is, again, trading above this hourly fair value gap. Remember, it's this one. Whoops. This one right here. So now I'm expecting that to be used as inversion, and what I want to see is something like this. Trade above it, trade back down into it, use it as support, and then move higher. So where exactly can I expect it to move higher? Well, now at this point, since I've got a more clear bias going into the day using daily profiles, session profiles, and PD arrays, now I can start to find what levels to expect price to draw to. Now, if we take a look at from this high right here, this is some clean trend line liquidity, right? high, low, high, low, high, low, high. No highs are being taken right here, and there's also imbalances in price in this leg lower, being right here, which was actually just met at 7:30, but we still have resting imbalances up here, right? We've got this one right here. That's a 15-minute fair value gap. We've got this high right here, which is also a previous day high, which is really important liquidity. Let's see, previous day high right there. We've got a new day opening gap right here. So from 4:45 right here to 6 p.m., right? That is your new day opening gap on the 15-minute time frame level right there. And so we've got a bunch of different things that we can target up here going into the day, expecting that the low of the day was already made, and I want to see a continued push higher. Below this 15-minute fair value gap, we've also got liquidity right there. That is actually Asia high, I believe, right there. You could argue that this is it right here too, and that's resting right below the previous day high and the new day opening gap. So that's pretty meaningful right there. But I'm going to use this one right here just because it's a more defined swing high on the 15-minute time frame, and it's resting right below this 15-minute fair value gap. So this is meaningful to me right here, and we can also assume that it's relative equal highs with this high right here that was created at 7:30 a.m. So that is something that I take into heavy consideration going into the day. So now at this point, I've gotten my daily bias for the day. I know what I want to look for. I want to look for higher prices drawing towards these levels right here. And so now all you got to do is wait for price action to be in alignment with that, right? And the time isn't right for me. I wait for New York Open to start trading, and 9:30 is right here. So we obviously have to wait. We're on a 5-minute time frame and play this thing out. So looking at this 5-minute actually, you might notice something like this, and I mentioned trend line liquidity before, right? This is essentially trend line liquidity. But if you remember what I just said before, this is that London low that I don't want to see get traded to. And we're trading this hourly inversion fair value gap right here. So I would want to see this hold, and I wouldn't want to see this get ran down here. Now it's easy to say in hindsight, but you just have to wait for price action to tip its hand at that point, right? We've also got this 5-minute fair value gap right here as well. And so really this is like the last line in the sand where if we go below this and close below, then I would see this getting ran and potentially London low getting ran. But I wouldn't want to see that because I have a bullish bias with higher time frame targets aligning with that as well. So if I saw that happen, then I would have to either change my bias or just close the charts for the day and not look for any trades. But if we start to um, get the clock moving right here, we can see that we dove right into this 5-minute right here, and then had a huge move up from the 9:30 open right there, and that Asia high target was hit right at 9:35 a.m. And we've got this 15-minute fair value gap there as well. Um, where I want my trades to originate from is from either like 5, 15, or hourly minute um, fair value gaps or order blocks or breakers and things like that. So this is one of those instances where the market opens up. We have a really small Judas swing lower, and then we just have a huge move and huge consistent move higher. That's pretty much steady and doesn't provide any pullbacks for possible entries in. And then by 10 a.m., we see that this previous day high, the new week opening gap high, and this new day opening gap high has been hit already. And so this doesn't provide any entries at this point right here. And this happens by 10 a.m. So at this point, you either wait for something to occur like in lunchtime, look for a potential rebalance of this range if a reversal calls for it, or look for something in the PM session, right? Just sit aside, say, okay, all my targets have been met. Maybe I need to wait for some more price action to evolve, wait for some more liquidity to be generated, and then just go from there, right? So at this point, Since all targets have been met, we want to start looking at our higher time frame levels again. And if we take a look above this previous day high right here and this longer price leg, we've got levels like this, right? This is an hourly fair value gap right there, and that's imbalanced within this huge leg down right there. And we've also got this one right up here. Okay, so this first one has been met already, um, and this one has not been delivered to yet. So this is still a resting imbalance above price. That's right below the previous week high. And if we think about daily and weekly profiles, right, we had a huge move down at the open, and Monday has been moving higher. And Tuesday, we could potentially expect a continuation, especially since NFP is on Friday. We could see a lot of sell side liquidity be generated and just see a one directional move higher up to this point. And some weeks it's just going to be back and forth up until Friday with NFP, but that's something to discuss maybe at a later time. But again, at this point, all targets have been met, so you just got to wait. And we can fast forward to the PM session right here and start taking a look at something which becomes interesting, right? So let's get these things off the screen. And this London low is starting to look pretty good, right? About how it was left, and we can expect that this would not be traded to again. That's the power of like weekly and session profiles right there. But at this point, if we go to our hourly time frame and start working from there, we got no retracement up until lunchtime, right? And in a classic buy day, that's actually exactly what you want to see, where 9:30 a.m. manipulates, and then we move higher for the morning. Lunchtime either consolidates or gives a nice move lower, and then we can expect continuation for the PM session. And so that's actually exactly what I was expecting right here is since these hourly imbalances were left untouched and price was moving one directionally higher, I wanted to see some type of retracement for me to actually get involved in because I want to get in at a discount relative to the range as opposed to just trying to get in and chase price, right? I need to wait for something that's more reasonable for me to get into. And once this happened right here, um, this gave me some more context, and we still have resting imbalances above that I can target. All right, they don't need to be met, but it's just something that I can base my trade around and target. So now that we have this hourly fair value gap right here that has just been met, we start to see price reject. I want to go down to the 15-minute time frame, see if I can find things that are in alignment with that as well. And we've got this really clear and obvious 15-minute fair value gap right there, and price is starting to trade into it. Now, if I'm bullish and I want to see price continue to go higher still, what would I want to see this fair value gap do? Fail, right? I wouldn't want to see and try and just change my bias and go, okay, I want to go short now from here. We could potentially go down here, here, take all these lows out down here. No, because I have a bias going into the day, longs, and that's supported by PD arrays resting up here. Session bias, right? AM long, lunchtime short or consolidation into a fair value gap, into liquidity, and then PM continuation. So I would want to have to wait, see this fail, get used as support, and then continue higher. And that is where the trade actually originates from, right? So we got this 15-minute fair value gap. I want to see it inverse. So I'm going to change that to orange. And when we see it inverse is on that candle right there, right? So this candle right here could probably bait a lot of traders into thinking it's going to go short, a lot of ICT traders, I would expect. But what ends up happening is if you have that predetermined bias, it allows you to have more context and have a condition in your trade where it's like, I need this to happen and then I can get involved. It's not just, oh, this fair value gap's holding. Well, why don't I just try to get in here and maybe catch this low down here, right? No, it's not valid because you have a bigger idea at hand. So now we see this inverse, right, with the close above the 15-minute fair value gap. Well, if I go down to the 5, we start to see 5-minute align as well. If we take a look right here, we've got equal highs. All right, so we equal highs right there. That's a target that we could have. We also got some right here. and we've got the AM session high right there, or excuse me, that would be lunch high. So we've got lunch high, equal highs, and now we've inversed this 15-minute fair value gap. In this leg higher, what we've got is we've got a 5-minute fair value gap here as well. And I believe there's a 15-minute fair value gap there too, right? Yep, right here. I'm not going to mark that out. Just know that we've got this 5-minute here. And now really what we got to do is we just got to wait, right? We've got the whole context set up for the trade. We just need to see price dip lower, get our entry model right here, and then continue higher. So what ends up happening is if you go down to a 1-minute time frame or whatever your entry time frame is going to be, what we start to see and what kind of concepts and ideas that we can start to implement is this is exactly what you want to see right here, right? This is like a bull flag getting created to trap traders right here. And in my previous videos, what I've mentioned is what I like to see is buy side taken first, like what happens right here. And what that's going to do is it's going to trap breakout buyers right here. We've got some sell side liquidity right here. So we trap buyers. We have some sell side that's on the 1-minute time frame resting right above this 5-minute fair value gap right here. And you literally just have to be patient, right? You can't see price start to move higher right here and think it's going off without me. You just have to trust in the model, and that just comes with um, experience and time behind the charts and back testing, right? Now one more high taken out right here, we start to see price displace lower, and then a really nice sharp move lower. And this is exactly what you want to see again, is because it's going to trap breakout sellers right here, right? They're going to think that this could be used as support or, excuse me, resistance, and that price is just starting to take off without them. So they're going to FOMO sell into it and try and catch the move lower. But what we're doing is we've actually waited for this to happen, and we're in our PD arrays. We've got resting liquidity above right here. We've got session profiles supporting our analysis. Um, and now all we need to do is just wait for our model, right? And at this point right here, what we've seen is this little fair value gap right here that was on the 1-minute time frame. We got to close above right here. And at this point, this was also supported by SMT. This low right here on ES was taken, and on NASDAQ, it was not. So right here, there was SMT on the charts between the two indexes, and at that point, that's enough for me to get involved in the trade, right? Entry on the close above that inversion fair value gap, stop below this low, because if this low gets invalidated, then it is the trade idea is just scrapped at that point. Take profit at or take partials at around like a 1-to-1. That's what I did right there, and then go break even. And then hold for this high right here, right? Because this high can still get me like a 1-to-7. And so it's like a low hanging fruit target below these equal highs right here. I believe that's what I did. I'll go and check the my trading journal in a second right here. I either took profit right here or at these highs for a 1-to-2. But that was the trade right there, right? We had a nice low resistance liquidity run higher right there. And it seems like you're waiting for a lot just to get into a trade for 4 minutes right there. But if you're trading multiple contracts, then you can wait, uh, you know, all that time to make however much money you want in that short amount of time, right? If you can work 8 hours a day for shit pay, then you can wait a couple hours for a setup for something that can help you leave your 9 to 5, right? That's my thinking going into it. So if I pull up my journal right here, Here's my trade screenshots. So I actually took I took one contract going into the 5 minute fair value gap right there because it was aligned with like my model and everything that I look for, right? It was buy side first, sell side second into the 5 minute fair value gap, and then we've got these OTE levels right here. So I took one low risk buy at the sweep of these lows right here into the 5 minute fair value gap, expecting that my model would appear right here with an inversion fair value gap, providing for like another entry at that point. And then from there, again, this is my my trade or my analysis real time. Pyramid at the inversion fair value gap. So I took another buy. You can see that this is at 2 right now. So before it was 1 right there. Now it's 2 because I took another buy on the close above. And so I took a partial at 1 to 1 right there. And then I did end up taking profit at the equal highs for my last contract. So I did end up going all the way up here for a 1 to 2. You can see I had that SMT marked at the lows right there. I have my 5 minute fair value or my 5 minute time frame right here, just so I could see how the candles are developing from a power of three standpoint. You can see that this 5 minute candle right here, it has a big wick lower. That's what I was entering on, right? Is expecting this to be like a wick lower. And then took my my partial right here at 1 to 1. Then moved to break even. You can see I have risk free right here. Those arrows are supporting where I entered in price. And then bang, right there, right to those equal highs. And so it was a really nice trade. Consider it the trade of the week. It was my really just the most obvious trade for me throughout all of this really tough price action, in my opinion. So I think it was a good one to cover. And the breakdown went a little bit longer than intended, but I think there was a lot of good things in there with you know, knowing how to build a framework going into the trading day, which is honestly just in my opinion one of the most important things as far as technical analysis goes, because if you don't build that framework and have an expectation and standards on what you want to see, then you're kind of just going in there, um, with your head cut off and just reacting and then covering it all the way down to the entry and exactly what I was looking for. And I have higher time frame targets, right? Like I mentioned, this 1 hour fair value gap all the way up here, the lunch high, these equal highs right here. But like I mentioned before, with how the markets have just been trading in this huge weekly range, I don't want to hold for longer term trades just because it's just so unpredictable, and I don't want to put that the pressure of feeling like I need to be right, like I need to have price hit this lunch high and take profit there, or I'm wrong, right? I was expecting to want price to go all the way up right here, but if I didn't take profit here or have low hanging fruit targets, then it would have ended up being a break even trade, and I would have been, you know, annoyed for the day. So that's the importance of understanding like the conditions of the market and adjusting your plan to it. So that's pretty much going to cover it for this trade of the week recap. So I hope you guys enjoyed it, and that'll be it.